Welcome to Elite Broker, the podcast showcasing the leading players and stories of success from Australia's broking industry.
Hello and welcome back to Elite Broker. I'm your host for today, Annie Kane. And in this episode, we're talking all things commercial finance. Now, commercial lending and commercial broking has been a big topic of conversation recently for both brokers and lenders, as many more small businesses reach out to the broking and lending community to ask for help in getting either their debts repaid or growing into the future. But how do you actually do it, and what trends are we seeing? From everything from ATO debt consolidation to Payday Super reforms, this episode has the deep dive into the trends in commercial broking. Joining me today is Edward Chin, the Managing Director of Head Finance Broker at CZM Finance, a Brisbane-based brokerage, who's been in the industry since 2015, specialising in commercial and business lending, working with everyone from startups to established property developers. But what truly sets him apart is his obsession with taking businesses from just making do with a band-aid solution to growth and into the future to create long-term sustainability and long-term clients. So in this episode of Elite Broker, we're picking his brain about how he does it all. How are you doing, Edward?
Good, thanks. Thanks for having me, Annie.
Appreciate you coming on the show and talking about all things commercial and finance broking, because we often on the podcast will listen and talk to resi brokers, but we don't tend to get a huge amount of commercial brokers on the show. So it's always great to talk to one, and we've actually been doing it increasingly recently. But for anyone who's not had the pleasure of meeting you, Edward, I mean, we said you started in about 2015. Is that right? Isn't in the broking industry?
Yeah, that's correct.
So why join this industry in the first place?
Yeah, in all honesty, I graduated uni and then I was a bit lost. So I applied for over 200 jobs. It felt like so many applications, so many interviews. And then I always knew, get a job, become a technician, a specialist, an expert in an area. And then my intention was always to go into business eventually. When I fell into broking, interviewed with a boutique firm up here, they pretty much said, look, with broking, you are starting your own business from the get-go. You'll learn along the way. And I had mentors that would go, okay, well, we'll mentor you how to do the business and how to do the technical side, but you have to learn to bring your own clients. And it's like, I guess, real estate agents, you have to be able to bring in clients as a broker and be able to do the work. So I kind of fell into it from there.
Why, when you were applying for all those hundreds of jobs, were they all in finance or were they in different things?
No, they were just pretty much any graduate position that would hire me. And it's kind of like probably a bit cocky or self-centered in a way where I believe like as soon as I get a job, I would do well in whatever I do, because it's just in my nature to work out how to be good at whatever you want to be good at.
Yeah. And what did you study?
I did civil engineering and international business management degree at UQ.
That's quite a different degree, really. Do you get to use it much in your job now?
No.
Yeah. You're not like specializing in engineering.
No, like I said, the engineering degree study was good because it teaches you how to solve problems. Every problem is different in engineering. You get given a set of formulas and you go, these are the tools that you need to use to solve a problem.
Yeah.
And then the business side was, like I said, always an interest of mine. And that's why I did both of them.
Yeah, cool. So obviously a problem-solving brain. You've got a science-based brain rather than a creative one, perhaps, more leaning towards the science. And you said, like, when you kind of first started in the broking industry, you were kind of like learning the ropes from scratch. How did you find it when you first entered? Like, did you know anything about broking before you started?
No, I didn't. And I think for a lot of new brokers, it is very daunting. You see it and it's very different when bankers move into broking because, they've seen a lot of it from a teller to a home loan specialist in a bank and then moving into brokerage. Coming straight into a broker, it was a very scary thing. I remember my initial mentors were just like, go out and get some clients. And I was like, and say what? Like, it's just like, you just got to go get the clients. And I was like, I don't even know. Yeah, it's just like to do a home loan. And I was like, but I don't even know if they ask me any questions, I actually don't know how to answer it. But my mentor was like, just go out, build the relationships and, you want to bring in the business. And to me, I was just like, I didn't know, but quite fortunate with the, let's call it cohort that I was with. I got along with a broker that had 2 or 3 years experience more than myself. And then he was just like, look, come along to my meetings. And we did interviews together. We did home loans back in the day. So I did learn a lot from him. He was a bit more very stronger on the sales side, whereas I'm, as you can imagine, from a engineering type brain, you're very process driven and everything has to be systematically within the parameters.
So after a few years of kind of hitting the ground running and like getting into grips with things, how long was it before you decided, you know what, I'm going to specialize in business finance rather than doing resi?
I think when I first started resi, it was always on the back of my mind. It was more so I didn't know how to get that type of business. I was with a brokerage group that were predominantly doing residential home loans. So the deals that we were seeing, even in training, were really geared toward residential consumer lending. Having that passion for business, I kind of put feelers out is how I came across the Fundamental Business Finance group. And during that time, it was a very unique period of time in their business as well, where they had 5 specialist business finance brokers, one doing commercial property, one doing developments, one doing commercial asset finance, one doing like trade credit. So, and one doing resi as well. So essentially across those 5 different mentors, that little cohort I came out of, we had guys all in their respective industries operating at a national level with 25, 30 years experience in that pillar of finance that they specialized in.
Yeah. I mean, I think Nathaniel Flack is the founder, I think, of Fundamental Business Finance. Is that something that kind of really taught you then a little bit of everything if you were working alongside or, you know, not necessarily alongside, but working with people who are specializing in these other areas? Or were you just like, I'm just going to focus on cash flow? No,
because I found like we're being trained by all 5 of them, we were able to hit the market a lot harder to go, hey, look, you talk to small business owners that better part not looked after well. Their loans are often seen too small, like a 10, 50 grand overdraft is, there's not a lot of remuneration in that for brokers. So they're often overlooked. So when we go and help them, it's just like, that's one very small piece. But it also buys us to prove ourselves, like we don't mind helping the startup, helping the smaller businesses, because as businesses grow, the nature and I guess the Australian economy is everyone goes, oh, now business is going well, I want to buy property. So it's buying those future opportunities, but establishing relationships a lot earlier. So yeah, I didn't say I'm just going to pick one aspect of finance to go, one pillar of finance to go down. We're kind of like servicing across a lot. I know Fundamental Business Finance, initially it was all the Fundamental Business Finance brand. So Fundamental now acts as a sub-aggregator for myself. They hold the ACL and my company is a corporate credit rep and then individual credit rep underneath that ACL. So brought out their own brand beginning of last year, CZM Finance. Prior to that, I did have a different brand that I had a commercial real estate business partner. We found because we were doing a lot more small to medium businesses and servicing those owners as opposed to commercial property transactions, we weren't doing as many transactions together as we had hoped.
Yeah.
So we just decided it's just going to be easier to manage separately. And hence, yeah, CZM Finance was born last year. From my aspect, no changes in licensing because I'm still under the same ACL provider. We use Connective as a software platform, but Connective has the option to bring your own ACL. So I'm technically still under Fundamental Business Finance for that ACL component.
What does CZM stand for?
It's my Chinese name initials.
Okay. So it's after you.
Yes, it's after me, but I kind of liked it where it kept people guessing a bit because, you know, instead of like EWC where it's Edward Wayne Chin, it's kind of like, well, what does CZM stand for? And I sometimes for simplicity's sake, I'm just like, oh, look, because I did have a close broker that ended his surname was, I don't know if I should say surname. So anyway, so I was like potentially, I just said, oh, C's for Chin. I was one of the 3 partners. There were a few brokers that had fit the initials, but really it came off, just using my Chinese name initials, which is not on any other legal document for me.
Can you remember what your first deal was that you settled?
as a mortgage broker or commercial finance broker?
Commercial. Well, we did both, one of each. But maybe I was thinking more commercial.
Okay. My very first residential was for like an expat that well, husband and wife, they husband was a teacher, wife was a stay-at-home, I guess what they call it, housekeeper, um,
Housewife. Yeah.
housewife, caretaker. I think there's formal names for it now, but we just did their first home. So that was one of my very first mortgage broking deals.
Hmm.
Uh, 8 years down the line, they paid off the house. So yeah, that's a very good story.
That's a great
Um,
story. I wish I had paid off mine in 8 years.
and then for the commercial finance side, it was a butcher. Butcher having some, I guess they were struggling with their cash flow. And then we kind of went in and said, look, we can restructure that to a longer term. Again, it was a very small deal. It's like a local butcher shop in suburban Brisbane. So
Cool. And it was for debt consolidation or cash flow?
uh, it was cash flow. They needed a cash injection to kind of keep up with their day-to-day activities. It was secured using their residential property. And then so you're almost doing a residential loan for business use, which gave them a lot better terms than you would with most cash flow type lending.
So fast forward to now, 2026, what kind of loans are you writing at the moment? What's like your bulk of business?
That's a good question. I would say it's probably 80-90% commercial, a lot in the cash flow space, a lot in commercial assets for business. We will do a lot of commercial properties because we've worked with a lot of business owners for many years. They're now looking to stop renting and they're measuring up their rental costs in their business to actually buying a place. Um, Realistically, the only time I do residential these days if I need the security and it forms a part of the commercial lending.
Yeah.
I do have team members that will go source their own residential loans, but yeah, for me, I'd only do it really, and it's reciprocal because a lot of residential brokers engage us for like refer us commercial work. Sometimes I do refer the residential work back out to them as well,
Yeah.
so it's a two-way street.
I think we've seen that so much the last few years. Like we've been talking about diversification and like offering a sort of full solution to clients for years here on The Advisor. But we always are clear to be like, that doesn't mean you have to do it all. It just means make sure that you are offering a solution. So you're not saying no to people, like, so maybe finding a partner to refer out specialized areas that you're not a specialist in. Do you have any particular like industries that you find you work with a lot? I mean, you mentioned a butcher earlier. Is it all just loads of butchers? Do you get loads of Christmas
No,
hampers?
I actually don't work with any more butchers.
Oh,
So that's the ironic thing. Like, that client's still in book, but he's actually sold his butcher shop and no longer doing that. So, no, we don't really specialize in any particular industry. But I'd say on the smaller side of clients, we've got little cafes, we've got little restaurants, um, local grocers, fruit shops. They're all on our books. In terms of when you start moving to the larger scale businesses, we've got manufacturing clients. So Australian manufacturing, I know a lot of people automatically think manufacturing is happening all overseas, but a lot of steel fabrication and it's like an engineering for certain parts for construction projects still happen in Australia.
yeah.
So I do have a lot of those on my books. We've got medicos, we've got pathology clinics, dentists, physios, general practice. Then you've got all the franchise type businesses, whether they're in health and wellness. We've got a couple of fast food ones as well. And sometimes we go, and main thing is when we're engaged, sometimes it is a full journey that we'll go, look, we'll be working to clean this up over a 2-3 year period. Sometimes we are put in for a very short period, but we go, look, to avoid this in future, these are the facilities you want to get in place. And then they kind of go off and I might hear from them 4 or 5 years down the track and they're, hey, remember me? We did something little years ago. So yeah, we don't really specialize in any industry. In short, I've got transport. import business fund. Yeah.
I mean, the reason why I'm sort of asking that is, well, how do you find these clients? Because if it's not like a specialization in one particular industry, it's not like you're kind of going to, let's say, Medico conferences and finding clients there. Like, how are you actually finding such a broad spectrum of different SME clients?
I think it's more so educating referral partners. And I'm sure you would have had several brokers talk about really good referral partners. Your accountants, your bookkeepers, they're the ones that are forefront with a good range of clientele. So if you're identifying issues and in the commercial space, issues that accountants see across multiple industries, they're more likely to remember you to be that person to solve that issue. Like we work with insolvency accountants, and sometimes it's just like a business that's gone through an SBR, small business restructure, or went into voluntary administration, but business has turned around. A lot of the banks just can't service these types of clients. So by offering a solution there, it doesn't niche you down to any particular industry. Don't get me wrong, I still go to very specific industry events. Like if I go, look, I want more construction clients, I'll go down to the Sydney construction conferences and expos, and you just go. And it's just being around the type of clientele that you want to pick up as well.
Yeah. So at the moment, are you seeing any particular demand? Like, are people like, I need debt consolidation, or hey, I need cash flow from an acquisition? Is there anything like trends you're seeing in the types of loans coming to you?
Trends is ATO is trying to recourse a lot of the ATO debt. So we're doing a lot of restructuring with ATO debt. Most brokers know how to restructure ATO debt when there's residential property. A lot of alternative lenders in there that are really assisting, but it's a lot that we're doing where there's maybe not enough equity in residential, or there's no property security and property equity, where we're really excelling in that space. That's where we get most of our referrals, because they are harder deals, they are more tedious, and it's all about packaging it and structuring it so that the lenders can assess it and understand their risk and what are the mitigants to those risks.
Yeah, of course. And I think that's such a key part of why commercial and finance brokers are so sought after by, particularly even with resi brokers, is that knowing how to show a lender, this is exactly what we're doing, here's the exit strategy, or like, hey, here's what they're going to do with the money, and having that kind of really clear story shown to them so they can feel comfortable with taking on a deal when they do. Aside from ATO debt, is there anything else that you're having a lot of discussions with your SME clients at the moment?
So I'm seeing two spectrums. It's always the ones that are in a bit of trouble, tight cash flow, which is where the ATO, other creditors are coming in, and then the businesses that are just in growth. So businesses that are growing so fast that the lenders can't keep up with, because, you know, they want to see a track record, they want to see a good history. But if somebody has always run a $1 million turnover business for the past 4 years, and then somebody's ramping up to 4 or 5 mil, the lending requirements for that 1 million business will not support a $4 to $5 million business turnover. Then from that, the banks go, there's no evidence that there's enough income to show that they can service and maintain a facility of something to support a 5 million turnover business. So usually businesses in rapid growth and business in trouble are probably the two trends we often see.
Yeah.
I know there's a lot in the market where people are just refinancing to get better rates, but we tend to not see too much of that in commercial.
Yeah, and you're not chasing it either.
Yeah.
We're going to take a quick break here. When we come back, I'd like to pick your brain about how you actually write your loans. So what sort of tech are you using? What's your process? What does your team look like? All that good stuff. And we'll get into it just after this break. Okay, so Ed, you were talking to me earlier about the types of loans you're writing, but I'd always fascinated to see what everyone's process looks like. So let's say I come up to you and I'm like, help, Edward, I've got loads of ATO debt. I've got 150K I need to pay out. I've only been in business for 6 months. Can you help me? What do you say? What do you do?
Really depends on the numbers. So if it's 6 months and you're already in $150,000 ATO debt, there's often something that has been fundamentally missing. In this unlikely event where something like this happened, we would really work with the clients to engage in other professionals. So we'd want to get their accountant involved, potentially business advisors. Like, how did you get into this much debt so quickly in the course of 6 months? Like, there's you have to be doing massive sales, but also massive costs that they haven't even realized that they've made those losses. Because we've worked with guys that have been in business for, let's say, 1 to 2 years, but then they're in like $1 million worth of debt. And you're like, bad debt, and how did you get here? You've made accumulated a lot of losses over the past 2 years, and it's just fundamentally not talking to having a good team around them to really advise them, put money aside for tax, make sure the creditor's paid, you've got payment terms, use that. How fast is the money coming in? And if you're not bringing this money in, it's costing you because you've got facilities that you use to pay for your operating expenses. Things like that. And usually if it is that 6-month period where 150,000 and let's say the business isn't to a strong enough position, I would then, talk to insolvency accountants and say, hey, look, it's probably nothing we can do at this stage. Have a conversation because you might be able to do an SBR provided everything's done correctly. Sit down with your accountant, make sure they're helping you, giving you the right advice so you know how to really turn this around if it is worth saving.
Yeah, and it's really interesting. I mean, firstly, sorry, I gave you a really bad example there. I realized that as soon as I said it, I was like, wait, why would I have so much debt when I've only been working for 6 months? But I'll give you another example in a second. But I think it's really interesting seeing what your answer was there, because you're not saying like, we just say, no, we can't help you. Actually, we're bringing in specialists to be like, let's see what we can do. Let's help you. Let's find out what your options are. So it's great to see that you're still referring out to those specialist finance professionals. But let's give you an actual answer that you can probably do something with. So let me think about a scenario where I've been in business for 2 years. I want to buy another business.
Yep.
What would your kind of conversation look like if someone's coming to you and being like, I have no idea how to do it?
Yeah, we do a lot of business acquisitions, and we actually help a lot of businesses that buy something and want to merge it in together. Through that, the key is understanding their current operations, their systems. So we do go through in a little bit more detail. If it's the 2 years, the clients always work with us. We have a fair idea in how they operate. Are they the type to always pay their tax on time? Do they always meet all their credit repayments? Or are they the type that will be using robbing Peter to pay Paul? So, getting credit from somewhere to make other repayments somewhere. And you'll usually see, patterns in these business operators. So when you say, look, you've got a business, you're looking to buy another, our first question is, let's have a look at the financials of your current business and the second one. What are the synergies between them? Do you sell the exact same thing, or is it similar clientele that you can pretty much cross-sell your existing services, new services? I'll use an engineering company I did last month. So engineering company buying another one, they do steel fabrication, but they didn't do powder coating. They acquired another business. There's a little crossover, but there were so many services in this second business they didn't provide, and services that they provide that this one that they're acquiring didn't. So I said from the get-go, you can kind of do some forecasting to go, if you're a one-place shop for all of this, whereas you can see the expense items in the business you're acquiring, you go, that actually becomes in-house, which you know what you can produce it for. Likewise, an expense in your existing company for powder coating is going external. But if you bought this one, you bring it in, you're going to get powder coating and fabrication cheaper. You're getting scales of efficiency.
Yeah.
So as those types of things grow, and when you do that acquisition, you can say these businesses will merge, but you're not going $1 for $1. You're actually merging them and getting a better profit. Your net profit line is actually going to be better due to the fact of those. And the other example is I'm just going to use brokers since we're talking about brokers. One brokerage buying another brokerage, you go, okay, that's fine. You do that, but you want to have a look at the business, what the numbers were producing. But let's say this is a brokerage that does residential, consumer, car loans, and personal loans really well. But then they're buying a brokerage that does those residential, and your whole diversification that all the finance bodies have been pushing brokers to do. It's great because you acquire this business. Suddenly you can go, hey, things that you have never thought about, or the previous broker that ran it never really sold, was what about car loans? Have you looked into your car loan review? We can do car loan review. Look, maybe you do the renovation using a personal loan instead of a mortgage top up. So you want to look at businesses and their different operations, their efficiencies, and how it can be translated. I have also helped some businesses and business owners where their operation isn't very good, but they're looking to buy a business that their operations is better. So throughout that, I would go bring in, hey, look, talk to your accountant, maybe bring in a business advisor to go, there are certain efficiencies in the business you're acquiring that you can learn from and put that into your own operations as well.
Yeah.
So yeah, it's really fun and I really enjoy the M&A space. So
That can't be an easy conversation to have if it is someone being like, you know what, your operations are not great.
yeah, we never say that. We just say, look, I think there's more efficiencies in this new
Yeah,
operation.
it's a
Maybe you
better way of
can
saying it.
implement that. Yeah, it's just how it's delivered. And um, I would say a lot of brokers will, small business owners will challenge. So they have always, if they operate a successful operation, they will be like, who are you to give me advice, right? Their way has worked the whole time. So I know a few brokers that have tried to push into this space and they say there's just so much pushback from business owners. And I was like, yeah, but you just need to know we play in the space of their business finance only. We're not an operations expert, but it's if you can identify something, say, hey, look, just putting a thing out there, maybe you guys can engage a specialist to see if they can help you. They go, you think it's worthwhile? And when you're being in this space, you'll come across a few business advisors that are very effective, and sometimes accounting firms do the business advisory as well. It's a good opportunity to give your referrers back a referral to go, hey, look, I think there's some inefficiencies here. The operator operates really good, but his profit margins are a bit slim. Maybe there are efficiencies that you can help improve to get that profit margin to the same as the business that he's acquiring.
Yeah.
So yeah, little things and really learning to navigate.
Yeah, awesome. I mean, that's a great examples there. Thank you for sharing those with us. I'm always really curious as well to be like, well, are you then this is obviously quite a lot of work to kind of go through the financials and see what the actual business is looking like the forecasting. But do you kind of use anything to help you do that? Like, are you using accounting software? Do you have any technology that the lenders provide to you to help you do that?
Yeah, there's a lot of lenders that are now, allowing you to API into bank statements and then they give you the breakdown. I know Lend platform. I'm sure you've had them on your show as well. They've also tried to really provide a software for commercial. You've got Prosper IQ. You've got so many different techs. Every lender's bringing new tech, and the advancement of technology is so fast. Every lender's really bringing in, and I think sometimes you bombard a lot of brokers. Like I remember going to an industry event, you've got all these different technology that's popping up and you're like, oh, that would save me so much time. But if you try to implement all of it, it's just too much for, let alone a boutique brokerage. Just think about a large brokerage and rolling that out just takes so long. And if you're an individual broker operator, it's just like, for you to operate 6-7 different softwares and subscriptions, you're like, I've just tripled my, operating costs. Yeah. So I think it's important to keep up with that and just really understanding which tool you can use to get a deal done. I have processing team. Sometimes they ask me questions and I said, look, I honestly don't know, because the last time I processed a deal through this lender, they were using this. 6 months later, they've upgraded to a new system. You're going to have to work it out. And I say, you are more in touch with processing than I am, right? I can structure the deal. I can go check it before I sign off on it. But if I had to go in to teach you, I'm working it out as I go through and teach you as well. So
yeah, well, that's a good segue for me then to talk about how you structured your team and who does what. So it sounds like you're mostly the kind of strategy. Who else is in the team and what do they do?
Yeah, so I've got 3 full-time brokers, which including myself. And then I've got 3 back of house really helping processing, chasing up documents. We've explored things like file invite. We've tried to get client feedback as well. And you get the ones where they go, oh, where the reminders annoy them. And you go, but if we don't send the reminders, we don't get the documents, the thing doesn't move. So we really try to find that balance of what tech becomes acceptable and working out how far we can push a client, chase a client. I think that's still a work in progress and always going to be. But as you start working with, like onboarding new clients, I think that's always a challenge. But when you start working with clients more consistently, you're just going, hey, look, I just need the latest 6 months or 3 months, because we would have those historicals, and clients are a lot more open to giving you 2 or 3 pieces of documents. But you can imagine, and there's no easy way to go about it. You onboarding a new client and you're asking for
A lot.
15, 20 items, and they're like, oh my God, like they get analysis paralysis as well. They, put on the back burner, yeah, we'll get it to you. And it just takes time. So what we've tried to do is go, hey, look, these are the things that you have to action. These are the things your accountant should have. These are the things your bookkeeper should have, your lawyer should have. Connect us to us directly. So if you do a open email, we can gather all those documents from your lawyers. And we found that to be less resistant than using file invite, because then they still had to physically go chase something up.
Yeah.
Whereas when we can go directly to the accountant or bookkeeper, hey, we need your latest BAS, we need your last 2 years financials, and the client's done the email to say, give Edward and CZM, whoever their team is, whatever they need to, because we're looking to do something. It also gets their other advisors on the same page as to what we're doing. So with the lawyers, sometimes we need trust deeds. We need to restructure what companies. And some clients actually go, I don't know. My lawyer accountant set up. I'm like, do you have a trust? Do your shares held in a trust? And they're like, no, don't know. So
it's a good actually example as well of getting everyone involved and reducing the amount of friction that you have with clients. Right. I think that's a good tip. Is there any particular lenders that you're using that you're like, this is probably my most used lender, or conversely, your most favorite lender? That's bad English. Your favorite lender?
I guess all the years I've done broking, I've tried not to have a favorite lender. I've said at the end of the day, as a broker, we're trying to find the best deal for the client. There are ones we would say, hey, look, this lender is going to be the path of least resistance. They might not be the sharpest on market, but it's going to get you your results sooner. And a lot of business owners are more so strapped for time, less so they can't get it done. So if I said, let's say they needed urgent working capital, a line of credit and overdraft, I would go, okay, we could get this done. You're probably in prime pricing with the majors. You're in this range. But it's going to take 3 weeks. We can
3 weeks?
Correct. Yeah, 3-4 weeks. So we tell them that, and it's just like, look, it's going to take 3-4 weeks to set up an overdraft or a line of credit of this nature, but you're getting prime pricing. But they might go, I've got suppliers I need to pay by next week. So we're doing things like, okay, well, you can do that, but you can't have both. You're going to have to pay more to get something in the interim. We'll put something in place, and you would know all the fintech lenders out there that are turning application around in like 24, 48 hours. So we'll get those in place and then go, yep, that will result. That's the Band-Aid fix, which I think a lot of commercial brokers may not even dig that one step further. So we've got your Band-Aid solution, all the best, and this is where we come in, where clients sometimes go, Edward, we need a quick 50,000. We need this injection. Once we get this, everything's going to be sweet. I just need to buy some stock and everything's going to be back on track. And I'm like, okay, we can get that. And they're usually like, if they don't have this money in their account to pay a supplier, it affects their business operation.
Yeah.
So we go, yep, that's fine. We can get it done. The minimum on those might be like a 6-month bank statement, IDs. But I go, look, these are lists. I want you to connect me to your accountant. So we want to dig that one step further. We get the Band-Aid solution. Then we sit down and say, your 50,000 is a Band-Aid solution. In 3 months' time, your hole is going to be bigger.
Yeah.
So we're going that one step further, go, that Band-Aid solution's resolved it now. So let's restructure all of these with that. Like a lot of clients can fit into the banks when it gets into commercial lending, the major banks. And we go, we'll restructure this into the major banks. And then you're going, provided nothing changes too drastic in your business, you've now got facilities that are more sustainable, that you can use over the next course of 2-3 years if the business stabilizes. So it's really understanding, and we get ones that come in. So most our inquiries will come through as an asset finance or working capital, and it's always a Band-Aid solution they ask for. But if it's like an asset finance, you usually can tell when they go, oh, I want to give you a car, I just want low doc. Like, just give me a low doc. I just need this car because I'm hiring new staff member. They need a vehicle. When you see that, you go, okay, that's fine. We can get, because if we don't get that deal done, they forget about it. There's another broker out there that will take that deal from us. So we get that transaction numbers. Hey, as a part of our due diligence, we want to just make sure the health of your business is okay. We get the car done, but we want these, because what we'll do is we will then provide information about that car loan to your accountant, but we also want a bit more. So throughout those, you'll see why they wanted to do low doc is because there were ATO unpaid, or they were a bit behind. And it's just like, well, actually, you don't need to bear that on yourself and keep it secret. And you shouldn't be ashamed, because every business owner, whether you're a 200, 100 grand turnover business right through to 10, 15, 20 mil, it's the same problems. They're just an extra zero, extra number. But every business is juggling, keeping up with their tax obligations, they're paying their creditors, getting money from their debtors, and it's just working around those operating capital. So yeah, it's one thing that's just like we dig it that one step further and really go into, okay, this is what's more sustainable, put that, and clients love it. So I know a lot of brokers will go, they operate in a way, we do the transaction, and then it's just like a settlement gift. You leave a happy, sweet taste in the client's experience from that transaction. But what we do is we're always like, we've done that transaction, onto the next thing. Okay, now the business here, onto the next thing. So, all right. And they might go, I'm wanting to buy a commercial property. Or like, look, you're not ready. Your business is not ready right now, but keep on this trajectory, increase your business. When you get this level of income, this level of a deposit, you can then look at a commercial property. Mm-hmm. So we give them that guidance, and it's value adding at the end of the day.
And I guess that's also way better than a settlement gift, because settlement gift might be a couple $100, but you're probably saving them like thousands, if not tens of thousands of dollars in the long run.
Yeah, correct. And then without you knowing, by building that relationship, as the business needs comes up, they need an extra forklift, they need extra something. And then they're talking about, what are the perks they can get as a business owner. A lot of business owners are so busy with their day-to-day, they're not across the banking finance products.
Yeah.
So that's
really where you come in.
Exactly. So, and plenty more room for other brokers to come into this space as well.
Yeah. I guess the other thing I was going to say is, looking at all of this work that you're doing, I bet some brokers are probably thinking, yeah, but that all takes time and that costs money. So do you charge like a fee to do that, to be that kind of business advisor and do all that? Or are you kind of saying, if we get a deal, we'll just get the commission then? I wonder how you're kind of covering the cost of doing all that work.
Correct. So depending, I think there's a lot of the turnaround work, the SBR, that type of stuff we charge a fee for. Let's say if it's one of the prime clients you're putting into your major lenders, your upfront and trail. And how I've looked at this, your trail isn't just money for jam, which that is a misconception a lot of people have. You're like, build your trail book, you catch up with the clients one time a year and just make sure their loans are in check. But when we do the commercial side, I go, well, I'm getting this retainer as a trail from the banks to service the client. So then we're just touching base. And then I don't know if that's a good way to explain. I'm using the trailing commission as a way to subsidize my fees.
I didn't realize that you get trail on commercial loans.
Only with the major banks, which is why, and it is also, you have to be commercially accredited, and a lot of the major banks require you to be able to package a deal up quite comprehensively before they pay you upfront and trail. So a lot of them will just do upfront as a spotter's fee, and rightfully so, because when a residential broker puts up a commercial deal, and if they haven't had the training to package those deals, really the business bankers within the branch are only just going, okay, you've just given me a name and number, some documentation, but there's still so much work they need to do to make it into a format that can be submitted to credit.
Yeah, awesome. I wanted to ask you as well about some of the other things that we're hearing a lot from our commercial finance brokers and also commercial finance lenders at the moment, and that is lots of questions around Payday Super, which is coming in on the 1st of July. So for anyone who doesn't know what this is, 1st of July, small businesses will need to pay super when they pay salaries. But for a lot of businesses, they might have previously been paying it quarterly or in a different sort of format. A report from Employment Hero was saying that they had like 80% of business owners didn't know about Payday Super. And once they did, about 40% said they would need finance to cover the costs of this cash flow change. According to Employment Hero, they're saying that it's going to be around like I think $100,000 for each SME. Now, obviously, it depends on the type of business and everything. But I wonder, are you seeing much questions at the moment about Payday Super? Are you proactively reaching out to your clients about Payday Super? How do they feel about it? What's the sentiment?
I think it's being actively spoken about by a lot of the accountants. We go to a lot of networking events, try to mingle with accountants and bookkeepers, and they're at the forefront of it. Like you said, a lot of business owners aren't aware. But it's really an obligation that's just being brought forward is how we look at it. The clients that we work with, we want to make sure that there's the business's superannuation for the employees are always paid every quarter or monthly, depending on the size of their business. However, a lot of business owners, when they become tight in working capital, they will use that first because they'll use it and then something else to make sure that by the end of the quarter, they can make their superannuation contributions.
Yeah.
I actually think it's a really good thing because currently, if a business, sorry, I can't remember what the fund's called, but there's a fund that Australia has for if the company has any unpaid wages to make sure that hardworking Australians get paid for, unpaid or underpaid wages. But there's nothing that actually give these employees their superannuation back. It's actually not a part of the scheme. And then probably worthwhile talking to the insolvency accountants in this space. They'll be able to give you the names of the funds and whatnot. So with the super being paid each pay run, which may be weekly, fortnightly or monthly, it ensures that the employees get their superannuation, and if the business goes under, they're not at a loss. The challenge for business owners here is you are brought forward your creditors, which is the ATO for the super, sooner. So usually if they work with a good broker, good bankers, they will ensure that there's enough overdraft and things like that just for their operating expenses, but also understanding what are their operating expense overhead terms and their payment terms for their actual clients and customers.
Yeah.
So we've got plenty different types of commercial facilities that can bring income forward, provided that there's contracts, there's work being delivered on a consistent basis, which comes in the form of, debtor financing, lines of credit, overdrafts, which are pinned on the overall business. If the business is sustainable, I don't think that's going to be a massive impact. It's the ones that are, as I always say, robbing Peter to pay Paul. They're the ones that are probably going to struggle a bit more and just need to talk to somebody that's a specialist in the space to get their business finances in order to ensure that all their commitments can be paid. But
yes.
These days, we have business owners that will come to us and say, hey, look, Ed, I'm not going to make payroll. I need money to make payroll next week. So those are the operating things. Okay, we'll help you get a facility in place to make payroll, make super, whatever that number may be. But then we realistically go, okay, that's a Band-Aid solution.
Yeah.
What is the way to get you back your head above water? Another part I can elaborate where a lot of people don't know, as of 1st of July last year, and I'm very conscious, we never give tax advice, but ATO released a statement where it's just like ATO interest is no longer tax deductible.
Yeah.
That created a huge drive for our business because everybody wanted to refinance the ATO debt and not be having it on an ATO payment plan because they go, hang on, I'm paying
all of this, yeah,
at the end of on the bottom of the bottom line, so I can't claim any of that as business expense, which I disagree with ATO's decision on that, but I also understand they're just trying to recourse the money and stopping business owners using them like a bank instead of a
flow. Yeah.
Correct.
Yeah. We'll take a quick break here, Ed. When we come back, I'd like to talk to you about what sort of challenges and opportunities you see in market. If there is a dream product that you would like a lender to create to make your dreams come true in commercial finance, what you do to unwind and de-stress, and your advice for new brokers. And we'll get into it just after this. So, Ed, we've talked a bit there about what kinds of things you're talking to clients about. And it's really great to hear how much you kind of work hand in hand with their other finance advisors to try and create a much more strong company for the long term. But I wonder, is there anything that you've kind of like seen or thought about recently or over time where you're like, it would be amazing if we had a product that did X, Y, Z? What's your dream product?
I often do talk to these lenders and say, create a product like this, and I understand their warehousing. The dream product is, in all honesty, I would say, this short-term cash flow injection space, a lot of it is treated as that 24, 36 month. I know there are a few lenders out there that have really pushed a 60-month term for unsecured business lending. All of the major banks will range from, 12, 24 months, but really landing in that 3 to 7 year timeline, as opposed to, and then for strong enough businesses, they will go as far as 10, 12 years unsecured. Again, depends on the business financials and a few other factors. The part that I would say a lot of these fintech lenders are missing out on is it's probably worth creating a product that is still within their 24, 36 month term, but a residual at the end. So you can go the business and they can opt to choose annual reviews or review at the end of the term. But you can imagine if a company was just like, look, we need $500,000 and they'll sort it out stuff. And you go, 500,000 needs to pay back over 3 years. You go, that's quite a cash flow intensive exercise to get that injection. And often we go, that's probably not going to work anyway. But if 500,000 became over 5 years, which some lenders have done, you go, that's great. You get the injection in, but it's more sustainable. A lot of the ones I would say is if cash flow lending could create a product that's probably more similar to asset finance, where you go, hey, here's a 3-year term or a 5-year term, but we will do a 2-year term on 50% residual. So you're paying it's still over like a 4-year amortization. But I'd be more interested for a product to be created where there's a longer amortization period, but there's more reviews in between. And then to go, okay, at any point when they start identifying risk, they can go, okay, let's work to restructure this or get ahead of it early. I understand from a lender's perspective, they probably want to be connected into accounting software. So if there's any metric that drops below a certain percentage, they can go, okay, we need to do the review and understand what's going on. I really think the lending landscape in Australia need to really work in more with accounting software and accountants and other advisors to provide that holistic solution to business owners.
Yeah. And I think that's why increasingly we're seeing accounting software providers actually become lenders themselves, because they're like, well, we have all this data, we can see all this stuff. Why don't we actually add on a lending side too? Unfortunately, though, most of those don't work with brokers. So maybe
Correct.
one day.
Oh, I was just saying on that aspect is like a lot of those, if they work with brokers and understood how to structure them, it would actually be better because a lot of those aren't in favor of the client. So.
Oh, there you go. Well, maybe we can make things happen, Ed. Also, what I want to sort of pick your brain about is your future trajectory. So you've been operating CZM now for about 18 months or so, but what's next for you? What do you have plans for this year? What do you want to do in the coming years to grow your business, if at all?
I think there's been a lot of talk and noise around the AI. I was open to my team. I said, look, realistically, a lot of the organizing, the following up that we're doing, I don't see it too far off. I said initially, probably 5 years, there's going to be a lot more AI that will be involved in our business. I usually try to do a software overhaul every, I would say, 12 months, but every 6 months to be like, look, guys, if you see any new interesting software, we're not rolling it out and just chasing the next shiny object, but let's put them on the list. I'll go over them every 6 months and work out how to implement through. So as of this year, we just did a pretty massive upgrade with different software that can help make all our jobs easier. And even just working out filing systems, like we've all done things a certain way and had to change all of that in preparation for AI. So we're providing more tag codes and indexing in a way that AI can search. So I can see in probably, because technology is advancing so fast, I don't think it's going to be a 5-year trajectory. I actually think it's probably going to be 2 or 3 years away. When working in to go, okay, if AI can do a lot of the back end and plug in and enter it into lenders like Apply Online at the moment for processing, if that can all get pushed through as seamless as possible, then broker market will be more focused on the relationships, the consulting, and helping clients achieve what they want to achieve through the lending side.
Yeah, and I guess that's the big thing, isn't it? It's been like, in every profession, every industry, people being like, where can we use AI so we can focus our resources on the kind of the higher value and the qualitative stuff rather than the data input. But of course, we're not quite there yet. But one day, you mentioned about like kind of working towards some tech. What tech are you using to do this?
There's a range of tech, and like I said, it also helps when I've got a few AI tech, software tech subscription SaaS software businesses. They would go, "Hey Ed, have you checked this out?" And I've got a list, and it's just like when I get around to it. But you hear it, and they're like, oh, "I'm doing this." One of my SaaS clients had developers that were costing him about 50 grand a month. Now he's down to under 10 grand just because the AI side. And I'm like, if SaaS business is already seeing that. I think Google announced yesterday that you either learn to work with AI or they give you, I think it's like a, severance pack or redundancy pack. So you could pick how you wanted to progress. And it's pretty aggressive in that tech space. I just think we just got to, as brokers, monitor it, work out how to implement it, how to use it. As software becomes available, what is the realistic timeframes to roll it out into our organizations? Every organization is going to be different, and adopting new software is going to be key. So, and what you would see is, and I fell into this trap a lot. You go, this software is great. Saw them at FBAA, and we roll this out. Then 6 months later, 2 other companies has done that feature, but I only went to this company because it had a feature that I hadn't seen in others. So they all start, going, hey, that company A has this feature. Let's bring it into our own company, and then company C. So it slowly, it just feels like that race that we're seeing across all the major AI companies now too. Like everyone's improving their next model and learning from each other, essentially.
Is there anything that you use that you like day to day that's like a godsend? Like any sort of suggestions or recommendations you give to other brokers when it comes to tech?
Not really. Like, I guess the internal comms software, we try to keep our internal comms through, like, I know there's different companies that will use Slack, then they have Microsoft Teams. So all of those, I think, are really good to work out, not to email internally. Having those types of platforms is great because you can imagine. So if you look at any broker's email, you can imagine all the lenders that we have on panel that are doing weekly updates. You just can't keep up. So all of my lender emails get thrown into like a newsletter filter, and it all just goes in there. When I have an idea what lender to go to, I'd go then search it. But I think keeping internal communication off of emails is, the first key. And then it's just working out how you want to file documents. So sometimes when we start working with clients with very complex structures, multiple companies, trusts that own shares in a company, then those trusts have a corporate trustee so you have a lot of different structures, and working out an efficient system to navigate that through commercial broking is really important. Less so when you're doing that residential consumer space. It's always an individual, maybe a company or a trust.
Yeah.
So, yeah.
Awesome. Well, when you think ahead to kind of, I guess, what you do, because it sounds like you work quite long hours, do you do anything to kind of like shake off the week to unwind and de-stress?
I'm going to say no. After work, I do a lot of local community stuff. So I'm involved in like the Hong Kong Australia Business Association. We do the Chinese Dragon Lion Dance. That's another not-for-profit, and it's just really getting involved. I'm always about making a difference. So I don't know if it's really wind down. It's more like you just turn your brain off away from finance, and then you're onto something else which you're also trying to grow, develop, or make an impact on. And then at the end of the day, probably closer to night, sit down in bed, scroll on the phone, and fall asleep. So
you just doom scroll to sleep. That's sad. Or maybe we need to find some more wholesome content for you, Edward. Maybe you can just listen to the podcast. Hopefully it won't put you to sleep though.
I don't want to fall asleep during podcasts.
Yeah. When you think about then, like if you were talking to a broker who's just starting out in the commercial finance space and, maybe they've been broking for like 6 months, what advice would you give them to succeed in this space?
A broker should find a good mentor in the commercial space to really be able to teach them and understand the strength of the commercial broking. Because like we say, commercial broking comes in different facets, and somebody that is a hell of a commercial broker that, specialize in tradies doing utes and tools aren't going to be able to teach somebody that's doing mining equipment for a big mine operation or a big engineering manufacturing. Same thing when you're talking about import exporting, and this is just commercial assets, right? Then when you start to look into commercial working capital for small to medium businesses and cash flow lenders and fintechs, it's a whole another minefield. So don't try to do it all. And I tell my team the same thing. Over time, you'll learn all of it with experience, but try to pick a facet, because I say my runway to really have a good understanding across all the pillars of commercial finance is 5 years. And if you say 5 years to learn commercial broking as a generalist, the income doesn't reflect and it's not great. So you're better off focusing on one aspect, being an expert, than slowly learning across different facets. But like I said, different facets, you may need to have a few commercial lending mentors to get across them.
Yeah. And that's interesting because I think they say something like it takes 10,000 hours to be a specialist in anything. And I think that works out to be about five years. So there you go.
Depending on how many hours you work a day.
Yeah, I mean, I was kind of averaging now. I was just doing the maths on my phone. I was like, I'm just assuming people are doing 7 hours. So that's going to be really low for a broker. But yeah, thank you so much, Ed, for letting me pick your brain so thoroughly today for the Elite Broker podcast. I really appreciate it. It's always fascinating to hear how commercial brokers are building their businesses. And we wish you the best of luck for what you're doing in 2026 and beyond.
Yeah, thanks so much, Annie. Thanks for having me on your podcast.
If you've got any questions for me or for Ed, then do feel free to reach out. You can reach me at editor@theadvisor.com.au and Edward Chid at CZM Finance up in Brisbane. And of course, check out all of our commercial content on The Advisor as well. We've got loads of podcasts going back with commercial brokers. The May edition of the magazine is always our commercial finance edition, of course, as we come up to end of financial year. Plus, we have the Commercial Finance Awards and SME Bootcamp as well, if you want to learn more about how you can succeed in broking. We hope you have a fantastic week, and we'll catch you next time for another episode on the Advisor Podcast Network.